Hey everyone, in the last 1 year, IEX share price is down 55% from its peak, and I have received multiple requests to create a video on IEX share. It is one share that was hot favorite of investors last year. In fact, before COVID, IEX share price was available at levels of rupees 40 to 50, and then it saw a huge rally where the share price jumped a high of 303 rupee last year, generating nearly 6 to 8 times return in a span of 2 years. However, from those highs of 303 rupee, today IEX is trading at levels of 138, which is down 55% from its peak. And people who invested in IEX shares last year are confused about what went wrong in this company. So in this video, I'll help you understand the exact reason why IEX share price is falling and what you could do about it. By the way, this is my personal viewpoint. It is not a stock recommendation. At the end of the day, you should have a clear understanding of the business and accordingly take a decision of buy and sell. And this video is only for long-term investors, not for traders. I recently conducted a poll where I asked what is your definition of long-term investment, and I was pleasantly surprised to know that 77% people believe that long-term investment is more than 5 years. Personally, I also fall into that category. I strongly believe that when you invest in a stock, you actually invest in a business and you don't sell your business with 1 or 2 quarters of underperformance. I really find it strange when people just invest based on past return and then take a decision of buy and sell purely based on stock price movement. But when I discuss the fundamentals of a company, I look at the long-term bigger picture. I know that I cater to a very niche audience because very few people really have the patience to invest in stock market for long term. But I am happy with my small family. My honest endeavor is to study strong businesses with strong future potential and discuss it with you all. In the last 1 year, I have discussed the fundamentals of many companies, but since in last 1 year the market has corrected, many of the stocks I discussed are down. But the stocks are still fundamentally strong. And this correction has created a good opportunity to add them in the portfolio. So as long as you find my analysis useful, I would continue to share my research. Alright, now let's get started with today's video. To understand the reason for fall in share price, first you need to have a clarity on how IEX work. So IEX is a power exchange platform that facilitates the trading of electricity in the short term. It means buyers and sellers can visit IEX platform and buy and sell electricity. So electricity trading happens in two ways. First, long-term power contracts where DISCOMs, that is electricity distributor, enter into a multi-year deal with electricity power producer. This deal could be as long as 15, 20, 25 years. And second, short-term contracts where the electricity contracts happen for few days to few weeks. If you look at the last year of data, long-term contracts represent 86% of power trading and short-term represent 14%. Within short-term, 7.7% contribution is from power exchanges like IEX. So it represents a very small portion of overall power trading. Now it is very important to understand what happened during COVID. During COVID, there was less demand for electricity due to lockdown as the manufacturing facilities were not running at full capacity due to lack of demand for products. And there was ample availability of coal. Hence, there was more supply and less demand for electricity. As a result, the electricity prices went down. In FY20, average electricity price was rupees 3 kilowatt hour. It further dropped during FY21 to 2.82 kilowatt hour. It was because there was ample supply of electricity due to coal availability and the demand was less. So if you have high supply and low demand, the electricity prices would obviously go down. This low price provided a good opportunity to DISCOMs to buy electricity from IEX to replace their costly power with cheap power from IEX. As a result, the electricity trading volume of IEX jumped a lot. This was eventually positively reflected in IEX revenues, margins and profits. In FY21, IEX revenues jumped from 257 crore to 317 crore, signifying 23% jump, and in FY22, the revenues jumped to 426 crore, signifying 34% jump. In fact, the profits jumped even crazily. In FY21, profits jumped from 178 crore to 213 crore, signifying 19% jump. And FY22, profit jumped to 303 crore, signifying 42% jump. On top of this, there was a huge bull rally post-COVID. So both sharp increase in profits and high liquidity during bull run resulted in IEX share price zoom from lows of 40-50 rupee to highs of 303 rupee, generating 6 to 8 times return within 2 years. This made IEX share price super expensive. At its peak, IEX was trading at P ratio of 100. So I hope now you got an understanding of why IEX price jumped crazily during COVID. Now let us try to understand why IEX price has fallen 55% from its peak. Post-COVID, when economy started reviving, the demand for electricity started increasing. Initially, this demand was under control, but eventually this demand jumped significantly. As a result, there was acute shortage of coal. Hence, there was not enough supply to meet the demand. So now the situation got reversed. The demand jumped significantly and the supply fell down heavily. So due to low supply and high demand, the electricity prices jumped significantly from the lows of 2.8 rupee kilowatt hour in FY21 to 6.6 rupee kilowatt hour in FY23. As a result, the electricity trading volume fell down on IEX platform. This eventually impacted companies' revenue and profits. Revenues started falling from highs of 114 crore in December 21 to 95 crore in September 22 quarter, and profits tanked from highs of 80 crore to 70 crore. On top of this, we saw a sharp fall in liquidity in the market. Hence, IEX saw profit booking after a huge jump and the share price tanked to current levels of 138 rupee. I hope now you got a clear picture about why IEX share price has tanked badly. Moreover, there were concerns regarding the new competitor of IEX named Hindustan Power Exchange, promoted by PTC India, Bombay Stock Exchange and ICICI Bank. So IEX, that once dominated the power exchange market with nearly 90% volume, is now facing a new competitor, and that also impacted investors' confidence. In terms of valuation, IEX P ratio has fallen from highs of 100 during bull run last year to current levels of 42. So now from valuation perspective, IEX is available at decent levels. Now the question is, what should you do with IEX share? For that, you need to understand the future. First of all, fundamentally, there is no problem with the company. The fall in share price is due to external event due to sharp jump in coal prices, which impacted companies' trading volume and profits, and eventually that got reflected in the share price. So fundamentally, IEX is still strong. As far as future is concerned, I strongly believe that the future of short-term power trading is very bright. As we have discussed, power trading from platforms like IEX contribute just 7.7% in total power trading. So there is ample scope for growth in short-term power trading. Then there is one big trend of renewable power production using solar, wind and hydro, and this trend would continue in the future. In fact, there is a democratization of power production. Earlier, the power production was mainly limited to a few big players like NTPC. But now, many people are installing solar powers at their rooftop, and eventually, they might also start trading power on platforms like IEX. Then electric vehicle would be the future, and there will be huge requirement for electricity. This will eventually increase power trading on platforms like IEX. Although the biggest factor that would drive the share price of IEX in the near term would be the coal prices. After the sharp jump, coal prices are now expected to soften. Moreover, now the winter season is starting, which is a lean period for electricity consumption. So that would also result in higher availability of power supply and hence fall in electricity prices. This should result in increase in power trading volume on IEX and ultimately increase companies' revenue and profits. So if you are an existing investor in IEX, there is no need to panic. Company is fundamentally strong. Yes, last year IEX price jumped crazily, but after this fall, IEX now looking very attractive. So you can hold the share in your portfolio. In fact, you should keep an eye on the quarterly results, and if the quarterly results start improving from here, then you can even consider adding IEX in a systematic manner. But yes, don't do panic selling. I believe that the worst is over for IEX and there is limited downward risk in the share price from current levels. And for the long term, the future is certainly bright. So this is it for this video. If you find this analysis useful, then do subscribe to this channel and press the bell icon to never miss an update. There are many more interesting videos in the pipeline. I'm sure you'll find them useful. And if you want me to cover any specific topic, do let me know in the comments. I'll see you next video. Till then, take care.